Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our view on the forex market. You could see what's going on. So in general, overall sentiment stands bullish across the board, not only on euro currency, but you could see what's happening on the cable, on the gold market, even on the cross market. Analysis shows us, for example, the performance on 10-year bonds. We talked about this previously. If you remember, with this hand and shoulders, and take a look right now, it seems that market has formed very weak right shoulder and is preparing for moving lower. So if yield starts dropping, that will be definitely supportive for all dollar rivals, and that probably might explain why actually on dollar index. And take a look what's happening. So market was not able just for a few cents to complete the grabber target. It's forming sharp reversal. So this also might be the reason for that. Currently, we actually talked about this yesterday. As we said, that is kind of the factor of risk. So we have grabber. It is not cancelled yet. So to cancel it, total market should drop below the lows, below 107 area. For now, it is valid. And for now, it's a kind of the risk factor because it suggests taking out the top. But personally, right now, I do not see the source of the strength of the dollar for now just to complete this target. So I don't know, maybe payrolls will be so strong that it will boost the dollar, but currently I have some doubts on this, especially with the massive firing from the government authorities by the Donald Trump. And they haven't particular in January, although maybe it's not built, has not been completed yet, but well, it's difficult to say. That's why on the paper we have this risk factor, but currently it seems that it doesn't work. The same we could see on euro currency. So if you take a look at the weekly chart, here we have the double repo, we have the grabber that potentially was absolutely in a row with the double repo pattern, because double repo very often suggests creating the new lows, washing greens of the previous bottom. And that's also the same pattern as on the dollar index, and it also has not been completed. It also stands as some kind of the risk factor, but once again, I also do not see here what the particular factors and actually triggers could make it work in the nearest future. Because on the lower time frames, take a look at the daily intraday charts, not only on euro currency but on the Great British pound as well. It seems that market is aiming to keep going higher, especially on the background of the falling 10-year bonds and the general yields in the United States. So on a daily chart, you could see that we've got this upward continuation that we discussed, but unfortunately, the market has not formed the deep retracement that we talked about. So this is the reason why we actually keep the trading plan the same. It still consists of the two options. As I said, if you're ready to take a bit more risk and you're ready to anticipate the possible confirmation of the double repo pattern, in this case, you could try to take position a bit earlier. If you're not ready for that, especially you do not want to keep it during the moment of the payrolls report, it will be better to do nothing and just wait when the double repo will be confirmed. Once it will be confirmed, we could try to take the position on some fib retracement. So it will be 30%, 618, whatever it will be. It's actually two options, and they remains the same. On the fall time frame chart, that's the levels that we might consider today for entry. Early entry for anticipation, let's call it in this way. It's 103.30, 102.86 area approximately. I suspect that if pullback will happen, the 103.30 is a more reasonable level for now, and the so deep retracement to the 102.86 in the current circumstances, it will be not quite reasonable. It will be too deep, so I would focus on this level. on the hourly chart, you could see that market also has completed the OP to the upside. So in fact, we stand in agreement resistance 104.10, and that's the reason why market could show some technical response, technical pullback here. If you're really very scalp trader, so you trade with the 5-minute charts, 15-minute charts, maybe you will find something to sell. So maybe here, for example, I don't know, it's kind of the hand shoulders might be formed, right? And so lets you to take the scalp short position with this ABCD down to the 103 30 area. So our destination points. That and towards what we have on the euro currency. But if you're more comfortable dealing with the cable, that's okay, because take a look on the cable. We also have great pattern. So I already talked about this. All right, so this actually our hand shoulders, it works and looks perfectly. Shoulder has been formed in a proper level. Now you just also be prepared for possible breakout once again, since shoulder already has been formed, and here was very deep drop. At this point, it's not quite reasonable to expect very deep retracement out of the neckline. Probably it will be some consolidation. Maybe it will be minor retracement. Something like, I don't know, here's minor hand shoulders might be formed somewhere back to 102, 124 area, 124.20 maybe. So this is area that you could keep an eye on by approximately 30% retracement. It's okay. So if you'd like it more, no problem. So you could try to trade the cable. It also has really great picture. That's actually towards what we have. Just as a bottom line, we're not considering taking any shorts right now, albeit you are really very short-term trader trading on the 5-minute chart, for example. And we keep on the table two options of the for position taking, either trying to anticipate double repo, which is carry a bit higher risk, although you could get better price for entry, or do not anticipate, just wait for a confirmation, waiting for a weak close, and actually that will help you to not be involved in the process of the payrolls report. So choose what you mentally like more and if you feel more comfortable, because both of these scenarios, both of these strategies actually aimed on the same stuff. It has in the background the same double repo pattern, but you could act a bit differently. So that's actually towards what we have. Let's keep watching and see what will happen.